We were at a meeting in Asia last year, and we heard a lot about the aggressive behavior of property developers. For example, Chinese firms have been bidding aggressively in property auctions in Singapore. And across the border in Malaysia, they're developing more flats than the entire private housing stock of Singapore. And Hong Kong firms have been offering mortgages to buyers, often without assessing their ability to repay. Actually not. They talked a lot about mortgages, but not much about developer debt. And we found this very odd because developer debt played a very important role in the financial crisis in Spain and Ireland 10 years ago. In Spain, the amount of developer debt was about the same size as the entire mortgage debt owed by households. And when property prices started to fall, default rates of property developer debt rose to 40% in 2013 compared to 6% of mortgages. In the short term, the news is pretty good because the debt levels remain fairly contained. In the longer term, debt levels are continuing to increase. And more worrisome is that the profitability of the firms has been falling since the boom years of the beginning of the decade. In 2016, the return on assets of the median firm in the various countries was around 4 to 6%. And if you compare this to the cost of debt, which is around 4%, this means that the median firm only just about earned the cost of their debt. And 2016 was actually a pretty good year. Property prices went up, interest rates remained very low. So imagine if this changes, if property prices started to fall, or if interest rates go up. In that case, even if firms do not default on their debt, they may be forced to sell assets. And this could depress property prices even further and affect households and other firms.